by Nadia El-Belasi in Dubai. She's a senior market analyst at Equiti Group. It's great to have you back on the program with us, Nadia. Now, let's first talk about this deal between OpenAI and Amazon that comes after agreements with Oracle, Nvidia and AMD. So just tell us, how major is it?
Well, good morning. And it's really evident now that the bull run is backed up by the AI initiatives, the whole AI infrastructure. Now we have a little bit more transparency on the kind of deals that are happening, like the Amazon AWS and the OpenAI with 38 billion is a huge number to be poured into AI. And now we're seeing more transparency about the kind of deals that we're having. We're going to see higher cloud computing and AI-driven methodologies. These are the kind of stocks that are going to see highs right now, but also the downside of it is that if the AI spending doesn't hits marginally the ROIs, then we're going to see a bit of a downturn there. But let's hope that doesn't happen. And now we're seeing also that it's not just a tech hype, and it's going into the cycles going into heavy capex. So we're seeing more on this fundamental role. So I think this is why we're seeing highs at this level.
Right, now, aside from this tech rally, do you expect fading expectations for a US rate cut to continue pressuring markets in the weeks ahead?
I think the fogginess of how uncertain things are when it comes to rate cuts is kind of affecting markets, but because the AI initiatives is overshadowing the rate cut uncertainty, and the fact that we already had a rate cut last week, this is also overshadowing the fact that we might not see one for December. But I think, as I mentioned, it is evident that the tech rally is actually what's boosting the stock market right now, and the more deals and the more spending that we see on the sector is going to boost market sentiment even more. I think the lack of data that we have because of the US government shutdown is also altering the way we could actually forecast whether we're going to see a rate cut or not. So I think as long as there is a US government shutdown, unclarity when it comes to data, especially the labor market, then things might get a little bit foggy. We might see a bit more corrections in the market. This can affect in the downturn.
And with gold falling below that $4,000 mark and the dollar holding firm, what does this tell us about market sentiment heading into the end of the year?
So definitely gold prices are expected to even rise further, whether we're just seeing on the back of de-dollarization or the investors losing confidence in the central bank because of the whole Powell and Trump situation going on. If Powell's going to leave the central bank and he's being forced to cut interest rates in the face of stabilized inflation still above target of 2%. So again, the most important factor is if whether investors or the global markets lose trust in the Federal Reserve. This is what's going to push gold even further high, and also the continuation of central bank buying of gold.
Right, we will have to leave it there for now. Nadia El-Belasi in Dubai, thank you very much as always.